Thank you for the lead in, Scott, in the polls. And hello to my sidekick today, Andy. Hello,
Hey,
Andy.
Steve, how are you, buddy?
Yeah, well, we got the usual crew here for the weekly trade of the week, 5 p.m. Eastern, part of our afternoon webinar series. And how about these new graphics we're about to go through? Maybe some of you attended yesterday's webinar, but we're upping our game here on our graphics. So let's just get right into it on the slide deck here. We have to always start with the old disclaimer of the we are not a financial advisor type page. We're a software as a service company. We're going to show some content. We're going to show some technology of our systems. But anything you see or hear in here should not be taken seriously as, well, it should be taken seriously, but it should not be construed as registered investment advice or official investment advice for you and your family. Everybody's different, and so you need to seek out the advice of a registered investment advisor or a broker. They're the ones that are all set up to do that for you. So just please don't construe anything you see here as investment advice, because it's not. These are just opinions. Okay, so another updated slide, but very important slide. The community of traders that have joined Trade Ideas, and we pride ourselves on the onboarding and the concierge services where we make ourselves available all week for you guys. And so I just want to kind of highlight some of those points to you. Starting on the right here, you know, the live trading room is a big hit. Barry Anderson is managing a room of hundreds of people. He's trading his own account. He's demonstrating Trade Ideas software and moderating a chat room, which he likes to call a live trading room. And there's a couple of really good traders in there as well. You'll start to see who they are if you've been in there. But the genius of this is it's free, and you don't even have to be a Trade Ideas user. So if you're thinking about the product, here's another great way to pull up a chair and kind of see it in action, ask questions. Barry's very liberal and generous with his time, but this is open Monday through Friday, pretty much from bell to bell. So a great place to park yourself for the trading day with other Trade Ideas users. And trust me, you know, the people that are out there making a buck running chat rooms are probably a little nervous looking over their shoulder, because free is exactly the right price for many people, and that's what we offer here on the live trading room. So beyond that, we have the afternoon webinars. They're always at 5 p.m. Eastern. Yesterday was Jamie and myself. Today I will lead off and talk about some trade of the week type concepts and a few more items I've added to the agenda, and he's going to help me. Tomorrow is the CEO Dan Merkin and Brad Williams. They always kind of give us a view out into the future of what's coming, kind of typically the way in which they run their webinars, a lot of questions and answers as well. And then Thursday is the Trading Studio with Andy and Jamie. So Andy will take the helm on Thursday and bring some content for you. Friday, we do not have any afternoon webinars, but what we do have is open to the public. Anybody can come and join what we call the Friday support session down there at the bottom. And that one is open from 11 a.m. Eastern to 2 p.m. Eastern. It's a 3-hour open forum. You guys come in and set the tone. Every Friday, we basically allow you guys to come in and ask questions, and even lurkers in there that are afraid to ask questions are getting a good amount of information from the questions that other people are asking. And so we usually have a good handful of people in there. Keeps us busy on Fridays. So if you weren't aware of it, again, free to come on in. You don't have to be a subscriber. You can come in and kick the tires and ask questions before you even subscribe. And lastly, at the bottom, I'm not going to move my mouse down there because it always covers it up, but we have what's called, in that double asterisk there, the TI University, which has basically replaced our one-on-one. Guys, we're getting too big and growing too fast, and our subscriber base is getting too big too fast. We're just not able to support a one-on-one phone call and desktop sharing. It's no longer really the highest and best use of efficiency for us. And we're getting great reviews. What we've done is we've opened up 4 days, Monday, Tuesday, Wednesday, and Thursday, starting at 12, going to 1:30 Eastern. Monday, Tuesday is more of the basics, and then we get into intermediate Wednesday and more advanced stuff on Thursday. So what we've done is kind of created a 6-hour content program for you guys, and we call it TI University. You can attend it as many times as you want. We've also even recorded the entire 4-video set, which is on our YouTube channel on the playlist of TI University. So a great way for new users to sign up, and the very first Monday, come on in and you're on your way helping the learning curve go faster for you as we go through a lot of demonstrated ideas. And again, that's back and forth Q&A, so there's good support there as well. So a lot to cover on this page, but we really are proud of it because we want to make sure that you guys fully take advantage of this 14-year program, which has a lot of layers to it technologically. I'm actually going to show you something today that you might not have even been aware of, and we'll get to that. Thank you again. Because of all the effort we put forth to try and do the educational series, and our subscriber growth continues on a parabolic track. So as we get started, the old theme for the webinars that I like to run for Trade of the Week is to remind people of Paul Tudor Jones, a great trader, hedge fund manager, that no man is better than a machine, but the operative language here is that no machine is better than a man with a machine. And let's be, open, we'll call it a human. I know there's female traders out there, and we'll just say no machine is better than a human with a machine. And that's what we're talking about today. The AI platform, the Trade Ideas Custom Scanners platform is a wonderful tool. That's our machine. But eventually, ultimately, it still does come down to a human component of discretionary decision making. And so, a man just making discretionary decisions on his own is not going to be as strong as a human being that has a nice bit of technology, which is our machine, and can still make discretionary decisions. And that's what we want to try and do, is try and help people make better discretionary decisions when it comes to trading. All right. Yeah, Waleed likes the new graphics. So do we, Waleed. We're tightening our belt around here. So today's agenda for May 5th, the Trade of the Week webinar, we're going to be pretty much following the typical formula, market recap. I do have some poignant things to point out here in today's market recap, so stick around for that, even though that's first. Holly recap. Boy, this was an interesting, quiet, very quiet day for Holly, and we're going to talk about some of the implications of that and how to parse out some of what Holly was doing today. Then we'll go into the Trade of the Week, which is the theme of the webinar. This week was HXB, which is a home builder. I'll talk about the genesis and how we came about to choose that and why maybe it hasn't triggered yet, but still might. And then we'll give a little update on First Solar, which was last week's Trade of the Week. And then, as I mentioned and teased earlier, there's many layers of technology and hacks and workarounds and ways to skin a cat using this program. And so what I want to demonstrate is something that actually came up in support chat yesterday, and I was a bit confused, and one of our Virtuoso users and now employee, Michael Noss, came in and said, well, we could try and do that this way and use this as a workaround. So I'll just kind of tease you with that, but I'm going to show you how to do something with a simple one-click going forward with our technology. I think it's a good time to take a look at a sector glance, look at some charts, and get some feedback from Andy and myself on what sectors are looking good, what sectors are looking bad, and then it's always nice, hopefully time permitting, to end with 3 to 5 charts that you guys maybe put out there, and we'll take a look and give you a second pair of eyes and give you an opinion on that. So, all right, let's hit escape on that and put that down. All right. Was that my hand touching the hand of AI? No, that was just a wonderful screen grab of content that Scott and Rudy put together for us. So here's my screen. Welcome to my desktop, everybody. This is my default layout. I'm going to expand my daily chart here, and we're going to start with the SPY. So I've left a couple lines on here. When we last spoke, we talked about this descending minor trend line. I call it a minor trend line because, well, we've been in a major trend up to these points, but then we get some congestion here, and it's been bouncing and thumping on that 200-day moving average, only to recover each time, I might add. But until a few days ago, this declining trend line was the ceiling, if you will, of the price action as it's bouncing back and forth between these two ranges, and it's a wedge, a pie-shaped wedge that was forming. And what I said was the bulls really need a bounce above that and a couple, or at least 1 or 2 closes above that declining trend line. Well, wouldn't you know it, we got it last week and then yesterday. And then let's just kind of zoom into what happened yesterday. Hopefully, if you of you were in the webinar yesterday, I'm just going to repeat what I was talking about. Looking back here, we had a really nice bottoming tail candle. We don't call them bottoming tails for nothing. And then we had 1, 2, 3, 4, 5, 6, roughly 7 days of nice up movement. That's a pretty long stretch as far as this market goes. I start getting nervous after about 3 days of positive price movement in the right direction. But nonetheless, it did what it needed to do. The spiders needed to get above and close, and it did. Now, what I want to do is kind of rehash what I did last night and talk about the 3 possible scenarios for what needs to happen next. And what needs to happen next is this is a very tired move here. Jumping in yesterday and trying to go long was you're just, running into the wind. You just weren't getting anywhere. The backdrop of the market was very much a headwind. And I pretty much said that we really need a couple days of consolidation. Now, the most bullish of all consolidation would be across this green line here, which I'm going to just maybe highlight with a markup. That was kind of our pivot line. That was where we broke out from back here. And if we wanted to maybe go sideways for just a couple of days, but stay above this green, this tip right here, that's the bullish of all 3 scenarios of a nice consolidation pattern. Well, we kind of bled through it today, but did bounce back up and tried to at least get a close above it, but not quite. But maybe close enough. We'll see. Scenario number 2 is going to be for this continuation trend line here on the downside. Let me just line that up perfectly. All right. So this downtrending trend line can also act like a pivot line where prior resistance can become current support. So maybe, just maybe, the price takes out today's low and a little bit and kind of settles into the downside of this declining trend line. And then maybe that's enough of a pullback to build a base camp and move higher. That would be scenario number 2. Scenario number 3 would be to pull back down to this line, which was a prior pivot line coming into today. And as you'll notice, that's where all the moving averages are kind of hanging out. So this would be the last line of defense for a pullback and a regathering of a higher low, building a higher base camp. That's what the bulls are going to want to see. Now, if we just drop back down into this wedge for any reason and blow right through those 3 levels I just told you, well, then we're right back in no man's land again. But that's not where we are now. We're kind of on a bullish watch here. The bulls are doing what they're trying to do. They're holding above this trend line. We just got to see where the base camp is going to be built. And then I think we will know in the next few days whether or not this is going to be a base camp that's being built here, and then we can move higher, and then we can proclaim that the bulls are back in control again. But that was a really big 7-day move this week and last week, and so it really made perfect sense, as I mentioned yesterday, for a bit of a breather and a bit of a pullback. We got a head start overnight for sure in the downside gap. Let's go over to the Qs, the NASDAQ. Okay, a little bit different story over here, and a little bit different story over here. And what I did is I've drawn maybe the first level, which we may have touched today. I mean, this is, again, 101 pivot line drawing. The high of this level back here corresponds with support back here. So we had support at one time. We had support here. Fell through, came through, and then bounced right back up into it, and then it became resistance. Okay, so the pivot line was support, and then it became resistance. It came back up. It was resistance on this day. Then we blew through it, had 4 or 5 nice days of closing above it. Look at the same thing that happened yesterday in the NASDAQ, guys. A nice bottoming tail, and then 6 or 7 days of green, and then a nice little topping tail with a bit of red in the body, signaling in my world and many others a bit of exhaustion. And so it made perfect sense today to see this pullback. Now, back to where we are in the Qs, very well, it could be that the low of today's candle tagged that, that pivot line pretty well. So if we can build off of this, and if we start to move higher back above yesterday's high, well, guess what, everybody? These possible head and shoulder little markers I've had here, I'm going to have to turn them off, because they were signaling, a possible asymmetrical type of head and shoulder. But the NASDAQ has done a wonderful job of trying to destroy that pattern we'll know here in a couple of days if, in fact, this pullback today is going to rest right here on the pivot line. If we start moving higher and take out those lines, I will be very quick to undo any suggestion of these lines at one point in the past. Working off the information that we had in the past, that's all we had to go on. But now as we move forward, we may have to ditch those lines. So I think we're at a real pivotal point here, guys. We're going to see if the breakthrough that we were calling for and then the pullback is going to settle in. And if it does, then the bulls are going to be in very strong control. If the price action continues to drop back down into the price range and muddle and drag back down through these moving averages, well, then we're back in no man's land again. But I feel like we're close to getting a resolution.
Look at that! Look at that almost perfect gap fill there in the Qs too.
Where is it?
No, going back to the high of yesterday. See how it's
right
filling the high of yesterday.
High of yesterday filled this gap right here.
Yep, that's right, almost to a T.
And look how it lines up to
exactly
the old asterisk possible left shoulder. So I'm glad you gave me that line, because I was talking about that, taking out that high, but putting that line in there does really help the eyeballs of people watching maybe see what I'm looking for. I'm looking for a real dig off this level. Now we have this 10-period moving average creeping up. Maybe tomorrow we try and rattle the longs a little bit and take out the low in the first part of the day, only to tag this 10-period moving average and pop right back up. That would be very bullish. But we shall see. But we're setting up for the bulls to possibly really pull one over on the bears after all that volatility that we had and all that thumping on the 200-day moving average and possible head and shoulders. The IWM did something really interesting yesterday. The Russell 2000 spent about 30 seconds in all-time high land before the sellers said, oh, that's an opportunity to sell. And, rightfully so. Same thing happened over here. 7 or 8 days of long protruded movement up. Going back to the Art of War, I said, Sun Tzu's, I forgot the name of the author, the Art of War, an ancient Chinese philosophy book, and it's been transcribed for traders. They've got a book out there called The Art of War for Trading. And there's so many similarities. And one of them is, after your troops have had a nice long victory, they need a rest. They need a shower and a hot meal and a good night's sleep. And so that's really what the order of the day very well could be here. After a nice move, tagging new highs in the IWM, the sellers tried to flex their muscles. But if we can build a base camp, again, same thing. Pivot level, prior resistance kind of became current support today. So if we can hold on to that and then build and move higher, well, the IWM Russell 2000 might be trying to lead this market higher, the small caps. We shall see. But once again, same action for a week of nice movement. You've got to expect a little bit of give back. You can't just go 15 days in a row upward. And if you're buying those types of setups after 9 green candles, well, you're going to learn pretty quick that you're probably the one who's going to sit through the pullback. Last of the 4 ETFs are the diamonds. And once again, I went ahead and drew a pivot line in here for the most part. That looked interesting back in the past. Back here, there was a breakout above there, some support back here in this area, resistance here, resistance here. We gapped up through the resistance, traded back down. And then, so I think this was an interesting level as well. But if it does want to bleed a little bit lower, we've got these moving averages right here to possibly catch the Dow. That wouldn't be the worst thing. It just means there's a little bit more give back, a little more breathing that needs to happen before the prices may move higher. But same thing here. If they fall back down into the moving average and come back down and try and test the 200, well, we're right back in no man's land again. So, all bets are off. But I'm trying to kind of carve out a possible movement here where we can dig in after a nice 8-day move on all the indices, build a higher base camp, and then move higher. And if that's the case, the bears are in big trouble. All right. Anything you want to add, Mr. Andy?
Man, now you covered it real thoroughly. Yeah, just be careful, because if we are, getting, earnings season is passing us up now, and it's still kind of a range-bound market. So Steve's right. It does favor the bulls. Above all our maybe moving averages, but yeah, just be careful, because if it's going to stay in this kind of funky range, it could easily drop right down back in there, and we'll see what happens. But let's hope something happens, because it can get kind of mundane if when you get in these nasty channels. But that's about it, Steve.
All right. Well, What's next on the docket, I believe, is talk about the limited action in the AI today. Do you want to keep it on my screen, or what do you want to do?
Yeah, because there's really not a whole lot to go over. I mean, as far as trades go.
Well, you can see the comment that I put in there.
Mm-hmm.
Sit on your hands today. So, start off with some of my observations coming in today. Only 4 strategies. This is probably as light as I have ever seen it. And so Holly, after not putting in a good day yesterday because a lot of the stocks were tired, just like the general backdrop of the market, I think there was a bit of caution that came through today. Whatever the score, again, there's no emotion. Caution would be an emotion. But for whatever reason, this is the way the scores settled up last night. There was only a few strategies that made the starting lineup today. And of those few strategies, only one of them fired off, and it happened to be a directional bias kind of early, even though the actual trades didn't work out. The Holly gave us a 30,000-foot view, which basically was, I'm not seeing any opportunity here. I'm definitely not seeing any opportunity to the long side. I think the path of least resistance is probably to the short side, which when we look at the end of the day, it pretty much was. But the trade count of only 3 trades, that might be one of the smaller trade counts we've had yet this year. So there's a lot of warning signs from our canary in the coal mine that we call Holly. But I'll let Andy kind of expand on the rest of that thought.
No, I totally agree with you, Steve. And Jamie and I were also, when talking this morning, right when we looked at the 4 strategies that made the cut. That wow, neither one of us had seen this a few ever. So to me, there's caution number 1, telling you with all those strategies that she has, in the combine that she's running, that none of them tested out. Only 4 of them tested out and made the cut. So. That alone right there is, like as Steve said, it's a caution flag. And even though the Holly does not have any emotions, we can take and garner what she's showing us and apply some emotions to us where we should have a little caution. So, and I was also mentioning today, had she had more short strategies make the cut, unfortunately she didn't. I thought it would, could have been a decent day for her, but you only had one. And unfortunately, man, yeah, they just didn't work. But once again, there's so much more you can take away from this than just 3 trades that didn't work. And that's where you can apply just a lot of logic and reasoning to the statistical model and sit back yourself. I mean, I can tell you through my experience of trading, this is a very tough day. You had a gap down and a very sloppy, slow chop down even further. It's just, they don't get much worse than that. I know from experience.
Yeah, David's right. Andy and I were laughing yesterday at the absurdity sometimes of the English language and how, is it live? Yeah. Is it live? Is it read? Is it read?
Yeah.
So yeah. David's pointing out that the putting on the brakes may be misspelled, but I may offer to you maybe a play on words. So thanks for catching that. It could make sense either way. Break out, putting on the brake. But I'll ask Brad. He's the one to make sure. And if he slaps himself in the head and says "do," then we know that you were catching a good spelling error there. So we'll find out. I'll make a note to ask him.
I'm almost certain. I bet you that was a play on words. But
I'm almost certain too. The way Dan and Brad think sometimes in their little corner, in their dark corner of innovation and thinking outside the box, they'd start to do things like that. All right, so a very light day from Holly, our canary in the coal mine, laying on the back saying, be careful, I can't make sense of this market today. So that's really the takeaway for that. All right, so moving on, I've got the trade of the week. Let's check into last week, and then we'll talk about this week. So last week was First Solar, and basically the genesis of that was the 2 weeks prior were basically in harsh words and actions telling us that this market is not rewarding any type of breakouts. So the lesson there is to take what the market's telling us and not keep banging your head against a rock expecting the same result. So we had to kind of, downshift a little bit and look for things that were extremely oversold. And so there was a 20-day range alert that was created to try and find things that were very close to being oversold and very close to the swing stop that we have here on the daily charts now. So the idea was to lean on all these people, that bought the breakout back here, only to see it reverse intraday, and then the very next day just get slammed, and then the next day slammed again, and now they're starting to wonder, where should I put my stop? And that can become an interesting scenario for an entry for us. We're playing off of other people's pain. We used to do that all the time in the office when we had traders next to us, and the guy across the table is pounding his fist on the table. First thing I'm asking him is, what are you in? So I can pull it up and look at it. And Andy many times used to say, please don't play off my pain, Steve. But that's what we're doing here with faceless, nameless people. So last week it worked. Okay, the first solar trade was entered down here in this general area on the open. People got different prices depending upon your patience level. But for the most part, it went from 66, 70, up as high as 75, 70 yesterday. So we got about 13% out of this sucker, from zenith to the floor. But there's some consolidation here, and the actual target of this trade is to get back to 80, the round number of 80. It was there just a few weeks ago after earnings, but then they played games and weak hands got washed out. So, this is okay. This consolidation is actually kind of going sideways here. So I think this trade is still intact. It's hanging in there. The sector's been strong. Actually got a little help too from news out of California that all new home builders have to have solar on the new homes being built. So that one's still intact. That was the idea. So this week we were gonna stay with the same idea and try and find something that was not a breakout, but maybe something that was hanging and hold. What's that?
I was going to say, before you move on, Callie has a question over there, and that's good, very good point, Callie. And because I was going to interject here and say, a 13% move is a really good move. So. Yeah. I would always, ring the bell, we call it, hey, take some off, whether it's a quarter, whether it's a half, whatever you feel comfortable with, but you do not want to see a 13% move, and have all those profits and let it go back to a flat or a loss. So learn to, ring the bell, take some off, and then, you can adjust your stop loss. That's up to we don't try to, coerce you into doing anything, but you're not comfortable with. So, we're just giving you ideas, and that's an incredible move to 78 right there. Gosh, it's probably.
I don't know why I thought 80. Good job, Callie. Way to you're on the ball there. I had to pull up my content, and that is correct. It even jives with the line, and so my thinking is coming back to me now on the target. Let's use the target where they broke out from before.
Yeah,
so
there you go.
Let's use 78. But yeah, and Andy's right. We used to have a rule. Once we got up 10% or so in a good trade, it's time to start thinning the herd. Take a third off, take a quarter off, take a half off, whatever. And it makes it so much easier to stick around for what we're hoping here is round number 2, where we can push out of this congestion and come back up to the prior level 78 breakout. And then while everybody else that maybe hung on to here is breathing a sigh of relief that they're back to even, well, we've made a nice profit off of their misfortune. All right. Yes, thank you, Calix. All right. I don't know if the X is silent. I think Andy might be right. All right. So this week, it's not Calix. Okay. All right. So this week we went for kind of the same idea. And also, remember, we're still right in the throngs of earnings season. So sometimes we might find an interesting, really good setup. And oh, look, it's got earnings in 4 days. We can't do that. We can't call something because we don't expect people to gamble and hold stock, into earnings unless they're at least in the money or maybe have taken some profits. So we went with an ETF. And the reason the ETF showed up is a lot of the basing and oversold and trend chain type of alerts that were coming through. Well, for one, Home Depot was really having a nice move last week, and that's actually part of the XHB Home Builders Index, believe it or not, along with Lowe's. And there were some other individual names that were coming through some of the trend changes. And so, well, we said, First Solar worked pretty well last week, tap dancing off of this swing stop down here. In this particular case, it tapped it almost once, twice, three times, the actual swing stop. And then when we wrote the article, it was back here on this little green day. And so we got very close to a trigger. Actually, we got okay close yesterday, not too close, but basically it was a penny above the highs of last week. This little rounding bottom here, if we pushed through that, there could have been a nice move for what we were thinking of sector rotation. But surprisingly, even with the market doing as okay as it did, well, it gave back a lot today along with the market, but it's still, for the most part, hanging out here at these levels. Here's a scenario that could happen, guys. Maybe tomorrow they try and tickle the lows of these 2 days back here, and then we get a buyer that jumps right back in underneath that swing stop, and then the base has been hopefully completed. And we still have, to the end of the week for this blue line, which is basically the highs of last week, to be taken out. So the good news is sometimes we put in an alert for the trade of the week that doesn't trigger immediately, and in this particular case, that kept us out of trouble. And so the only thing we can hope for to get this trade live is for, from what I've seen, there's no reason for it to turn on a dime right here. It's down here, it's close enough to these levels. The way the algorithms are programmed, it's almost like it's a foregone conclusion. They're going to want to go tap these levels on them and bang on them and see what happens. And then if we get a nice reversal out of there, well, maybe then the second mouse can get the cheese on this particular trade. But, the idea was to try and avoid earnings by a specific stock, find a sector that was beaten up, and possible major institutional rotation will start to come into this sector. But we first really kind of need to get a resolution on the S&P, the Dow, and the Qs to see if this market does want to go higher. If this market does want to go higher, I have a pretty good feeling that the XHB will recover from these doldrums, these down basement levels down here. And then if we get back a trigger above there, that could be one to consider. So for those of you who have the price alerts, maybe mark that up, and then you just set it and forget it. Mm-hmm. Trigger doesn't trigger after a few days. How long would you wait before to consider? As a general rule of thumb, I kind of just like to keep it active during the week of, because the farther we go out, the more things that can come into the mix. So a general rule of thumb is the week of. If it doesn't trigger that week, I'm not really going to consider it ever triggering. But that doesn't mean that you guys can't look at it for the following week. And if the market's ripping and you see one day you come in and you've got like the sector alert here that I have, and old XHB is up here at the top, well, you might want to take a chance, and maybe there's some nice sector rotation coming in from the institutions. But that's not going to happen unless we get a coast is clear from the general indexes wanting to build a base camp and move higher. But good question. Typically, it's live for this week. Next week, yes.
No,
keep them on the radar.
Mm-hmm. Yes, that's a very good question. A great example of that is GE. I mean, that was one that we called that never triggered. But this is one that's just really starting to put in another base again. And unfortunately, our trigger was 14. We never got it. But hey, these are good ideas. So keep them on your radar and do with them what you wish. But yeah, I agree with Steve. I would keep the trigger in there and reevaluate when you see it again.
Yeah, and hopefully the markets are, moving higher and the bulls are happy. So if everything can line up, go ahead.
I'm gonna, if you don't mind, I think this is important because some of you guys may be asking, okay, why did you have a trigger in XHB, but the prior week with First Solar, you just said buy as long as it's above this level right here. Well, look at the difference between the two charts on like a 6-month chart. You're going to see this one is kind of channeling going sideways, had great earnings, and then you had a move down. Okay. Now look at the one in XHB. Okay. 6-month chart. Okay. It is in a terrible downtrend. Okay, so you want charts like this. The reason we didn't just call it out, like take it right at the open as long as it's right around here. You want charts like this to show some signs of a turnaround. In other words,
blue line is the level of the turnaround. One more time.
That would have been like about a month high there. So yeah.
One more time, back to First Solar. What Andy also didn't remind us is that there's kind of an imaginary trend line.
Beautiful trend line.
Beautiful trend line. There is no such trend line on XHB. We need confirmation for this one to go. But last week, we said, hey, just jump on in on the open, right on the trend line. Let's use their pain as our low risk entry. And there was hardly any pain at all. And when you start to get a few of these trades where you get in and you're in the money pretty quick and you were running against the herd, I mean, hey, it's really easy to run with the herd. They're all stampeding. They're scared. But all of a sudden you look at a level that makes sense and you're like, enough. I'm going to jump in right here. And when that starts to work for you for a couple, 2 or 3 times in a row, you start to open up this new magical level of confidence in your brain that you didn't have before, and you start to look at the market in a whole different, light. One of the earliest, easiest newbie mistakes is to want to chase the herd. But this is a classic example of showing you that chasing the herd doesn't always work. You got to be contrary to the herd sometimes. But still, in the bigger picture, it really wasn't that contrary.
Exactly. Yeah.
All right, that was a trade of the week. All right, now I want to show you guys a little hack. And again, it came up in customer support the other day. The guy basically said, look, I have a scan. We'll use my trend change lubricant here as our example scan. He goes, but there's a few stocks out there that come through my scan sometimes I don't like. I don't want to see them. I just don't want to see them for whatever reason. Maybe they've lost money in them. Maybe they're too squirrely. Maybe, because they're still meeting the parameters, of course, of the alert, so the filters are all set, but for whatever reason, they just might not like that chart, all right? And so the person said, how can I, without having to go back to, create a symbol list and do all that, or exclude the single symbol, is there an easy way for me to, on the fly, come through and let's say, okay, listen, my trend change lubricant here, to ADX, I hate that stock. Don't ever freaking show me that stock again. All right, I'm just making up a story here. I have no beef with ADX. But how could I, in perpetuity for the future, going forward, make sure that this ADX doesn't show up on my screen again? Well, let's review something here real quick. If we go to Configure, in the Symbol List tab, we basically only have 4 settings. They can't be combined. They're one or the other. The first one is defaulted to all symbols. Well, that means we're scanning for every single symbol out there in the universe of stocks coming at us. Option number 2 is only from the following list. Okay, well, we've done some of this. For instance, my sector ETF does this. I use ETF, and then I say only from the following list, and then I click OK, and then I've got something that's only showing me the symbols that I want to see. What's the third option? The third option, I'll go to the bottom, is single symbol. That comes in really handy sometimes when you're saying, hey, I want to just run a history and see if I can locate if that stock ever came through. The stock I was looking for was AMD. So I'm going to go ahead and go single symbol, click OK for AMD. Trust me, the window will turn blank. But then if I go through history, if AMD ever showed up, it's a lot easier way to try and find your way through there. So the single symbol usually works well when you're trying to find out, did that symbol actually come through in my history without having to parse through everything else. And that brings us to the fourth, and this is what we're going to focus on. Exclude the following list. All right, so what this means is we can actually have a list of symbols, and I've already created it here, but we'll go back and redo the steps. Create a list of symbols that I don't want to see, which means we're still monitoring the entire market, but excluding anything that's a symbol within these symbol lists. So just the opposite of looking for only the symbols in this. It's the opposite. We're scanning for all symbols in the market, but we're excluding any symbol that may come in here that we just don't want to come up and have our eyes have to look at. So how would we do that? All right, the first step would be to create a watch list, which I've already done, a symbol list, and I called it excluded. Where is it? So I went new list, and I just typed in all caps, exclude. And I hit OK, and I've already done that. So let's go, exclude. Where are you? Here you are, exclude. All right. Well, you can see I've already got ADX in there. I've got another one, ATRA, and I've got this one. So I've got these 3 in my exclude list right now. So let's just go ahead and keep that as is. And maybe for any other reason, maybe I just can't stand Elon Musk trolling all of the short sellers, and I don't want to see Tesla again, ever again. I'm going to click OK. All right, so now we have the exclude symbol list with 4 symbols in there. This is our main library. So let's close that. Now going back to my example here, and this can be done in any simple window, whether it's a T window or a M window or A window. When we go to configure, the first step you're going to do on symbol lists is you're not going to see it over here. you're going to have to go to Add Existing List. And on Add Existing List, we got to go find where's my excluded list. Where's my excluded? There it is, exclude. Click, and now it brings it over here to populate. Well, now what I can do is I can checkbox that exclude. And remember, there was only 3 symbols in there, but one of those symbols just happened to be ADX. All right, so let's go ahead and click OK.
Wait, Steve.
Wait a minute, I did it wrong, didn't I?
You had it on only the following list.
I had it on only, yeah, thank you.
Yep.
That would make perfect sense. Only the following, exclude the following. And I'm going to click OK. And now everything's going to come back and ADX will be gone. I got a third step I want to show you. Okay, ADXS is now gone from the top. All right. Now let's say we're in the middle of the day and another one comes along. Well, here's the real takeaway of what I want to show you guys. There's a one-click ability to just say, RMTI, I hate that stock. I don't ever want to see it in here again. Right-click, and then you go down here. Look at the Send RMTI. Well, we can send it to a chart window. We can send it to a single stock window or external website, or at the very bottom, our second submenu. Open this up, exclude. What did I just do? I just threw that one into exclude, and now it's gone. What was it? Was it RMTI?
I thought it was.
I thought it was too. Let's refresh. What's that?
Do it again and go to the exclude at the top. Looks like you had 2 excludes in there.
That's very possible. Send RMI to.
Yeah, at the very top. Go to the one at the top. Let me see.
That worked. Okay. Now it's gone. Maybe I want to get rid of DDD. Right click, send DDD, symbol list, exclude it. Why isn't
oh,
that
you know
working?
what? It's refreshing every 30 seconds. That's why.
So it's gonna wait for the next refresh. Okay.
So you had it right the first time. Here you go.
All right. So guys, that's the ultimate workaround. Is you can right click into any symbol and you can send that symbol to a symbol list that we call it exclude, but we just so happen to have this one configured to where the exclude is working for us. And if anything else drops in there, it's going to be excluded from the list. And I don't think I could possibly say exclude one more time. All right, so that was a little workaround, just a little idea for people who want to suppress certain symbols. Now what I'm going to do now, so I don't mess up my my top list windows, I'm going to turn that off, exclude, and all symbols. Back to all symbols. And there they are, ADX, RMTI, and DDD. So that's how you'd use a simple one-click way, as you're in the heat of battle. You don't want to have to go up and change your library, but just one click and send it to a list that you have designated as your exclude list. Okay, where I think I want to go now is since the market's making waves and trying to do things, it's always interesting to go through, and I haven't really done this, but maybe once earlier this morning. So I want to go through some of these sectors and stop on some of them that look interesting. So today, the regional banks were strong. It looks kind of like the Dow and some of the other stocks. It just maybe wants to consolidate and possibly move higher. But I'm going to look for something that really sticks out. This is kind of sticking out. We've got a bit of a gap up on the daily, and it's kind of doing a daily horseshoe. Didn't come back and fill the gap, and now it's kind of heading to new highs. So this might be interesting for a markup of the OIHs if they decide to go. I'll just leave myself an alert on that one. Regional banks are going to look similar to the national banks, or vice versa. Okay, here's retail. All right, retail definitely had a lot of resistance right about back there and basically in no man's land. So, maybe it's going to make an assault, but we've had 3 good solid days behind us. Ooh, the airlines are not looking very good at all. They're kind of like that home builders ETF. They're down here banging on the swing stop low.
Fuel prices.
Really, yeah. Steel had a good day today. Interesting. Big green candle today in steel after gapping down with good volume. Interesting. This is going to be a major level coming up here if it ever gets back to those levels, but it certainly is looking like it's trying. The broker-dealer, the IAI, it looks a lot like the indexes. Oil, the commodity.
Ooh,
Well, that's why oil
nice.
service is so strong. This thing is really nice. I mean, the moving averages are stacked 10, 20, 50, sideways for the last 5 days moving action. I'm going to put an alert here in oil. USO new high. Agriculture is not really a great ETF,
Mm.
but nonetheless, could make a move next week. IWM, we talked ad nauseum about that. Hopefully it holds that pivot level. UNG is not a tradable. We won't even talk about that. The energy sector, well, kind of like the OIHs, they've had a gap up and they've had 4 or 5, 6 days of good movement. I anticipate maybe a little pullback or consolidation on the energy sector. But then if you look left, there's a big
Yep.
level coming up over there in energy. There we go. The solars, we know a lot about the solars. Basically, this move really did get helped when the volume kicked in. All that was the news of California. New home builders have to put in solar, which is just going to add more pricing to California homes, but that's what they want. All right. Financials are going to look like a lot of the other things. Yeah, big, strong day, and they're just consolidating here. So financials are always a good leader. If we can get a leadership out of financials, there's our bottoming tail, just like the markets did. 6 days of good green candles, and nice shallow, I'll use the word shallow pullback here. So I'm going to go ahead and mark this up. If the XLF financials want to take out that recent high, XLF will be moving higher. I did not do that line correctly. I can actually grab that line and move it right up here.
Mm-hmm.
There. Close enough for government work. Spiders, we talked about that. Technology, very good, look very similar to the spiders. XLK, diamonds, we talked about that. Now, this was interesting. This was one that Andy pointed out to me last week. Came down and was beating on these swing lows down here, but was finding a little nice push. But I think we're a little tired here for the moment. A couple of days of rest could be interesting. And if they come back and take out these prior highs, that could be interesting. And semiconductors, looking very much like the technology spiders. Again, everything's kind of the same, looking for the consolidation. The ones that are pulling back deeper are not as strong as the ones that are consolidating, going sideways. Treasuries, forget those. The Q, we talked about that. Healthcare, yeah, just kind of in no man's land there. IYR, big pullback in IYR, commercial real estate, and very much under pressure, under the 200-day moving average. Not really seeing a whole lot there. Silver got beaten up overnight. I don't know what happened, but this is why we try not to play silver and GLD, guys, because you lose. Look at how much control you lose overnight in these things. Same with oil. You can lose a lot of control in the 24-hour traded commodity futures if you're not careful. Gold, same thing. Big spanking today in gold. And then here's our XHBs. Well, we already knew that. They didn't really have a great day. Maybe tomorrow's a new day. We'll see what the market brings, but no harm, no foul. And then the miners, of course, are not doing very well either. So, that's a quick jaunt through sector land. I think oil and the oil services were interesting. Again, I caution on trading the USO, but OIHs are stocks, and so they're not going to gap up as significantly. That was probably the nicest looking one I've seen on there. The XLFs, again, might get busy. Really nice shallow pullback. They might move forward. So, financials and oil services seem to be kind of poised and hanging in there for possible future moves. All right, well, that brings us to a perfect 5-minute final segment here. For those that want to have us take a look at a stock, it always helps to let us know if you're long or short currently, or if you're thinking long or short. We can put an extra pair of eyes on here for you and maybe show you some things you hadn't thought about. But the floor is open if you guys want to send in some symbols. We'll probably cap it to 3 to 5. If not, then we'll just turn it over to Scott. But I'll give you all a moment or two here to, if there's a stock that you're stalking a stock that you want us to take a look at. We're happy to give our opinion. Kind of how we've been ending these webinars the last few days, and it's really quiet out there. Okay,
Yeah,
well,
it is. Yeah,
guys don't have a whole lot. So going once, there's one, there's two, there's three. All right, let's work with those. Let's start with Siri. Um, just as an aside note, hopefully you're aware that Sirius Satellite, have you ever looked at the float on that? This stock has a float of 4.4 billion with a B. This is a this is a $6 oil tanker, and it takes a lot to move this thing around. So just be aware of that. It's the exact opposite of what we would call a low float. That being said, obviously it's had a nice push as of late. Let's take a look here. Earnings are behind us. Not bad. I would keep an eye on this level here for the old discussion we have often of pivot. Prior resistance can become future support. But what's also in front of that is this moving average is fanning out, the 10 above the 20, the 20 above the 50. So two levels of pullback I'd watch for. You could use a pullback to the 10-period moving average as an entry, or maybe a pullback to the pivot line. But what I'm seeing here is about 4 or 5 days of really good movement. If you don't get a pullback in the next day or two, and this 10-period moving average keeps creeping up, well, then you may not get a pullback. You may get the strongest of the consolidations, which is sideways price action. And when that happens, sideways price action is usually waiting for this fast 10-period moving average to come up and catch it, and then hopefully push the price higher. Good looking chart, but it takes a lot of shares to move this thing. It is a giant tanker for sure. CRNT is the next one. Okay, networks, earnings date behind us. So this was the earnings, popped up, pulled back. I think I would just wait and see if this thing's able to break out. It's kind of in no man's land at the moment. It's doing good for the most part until we back up a little bit, and you can see that prior support was strong back here, which became current resistance. These pivot lines don't lie. They do these things for a reason. So that's really all I see. If you can get back above that pivot line, going way back in history, there's a good reason for possible higher prices.
Mm-hmm. The psychological 3 level too. So
$3 on the
yep.
on the nose. Okay, CNC, very wonderful trading stock. Had a wonderful long trend. A little nervous about this though, the way we couldn't kind of get a higher high out of it, and it's kind of a little topping tail. I think you're really going to want it to hold this 20-period moving average. It held it back here, opened down but closed above. All these days it was messing with the 20, but it always found a way to close above the 20. But coming back up, we could have a lower high right here. If this thing comes down and closes below the 20, I'm not liking it so much.
And plus, you got about a 2-month trend line there that it would be breaking too if it gets below that 20. So
down here, up there.
Yep.
So this one might be a little tired. We'll see. A little tired. Okay, I am gonna go with one more, the last one, and we're good. KR, Kroger. All right, food and specialty. First off, I really kind of like the way it's beaten on this level up here the last 4 days. It's trying really hard. Look at how it lines up. See what I did there, guys? I just used these last 4 days, and then when you put the line in there and you go back, you start to find Easter eggs, meaning it lines up perfectly with the gap down day. So for whatever reason, we had a little hurrah above the pivot, but then we got thrown down below the pivot. But now we're trying to get back above that pivot. So I love it. It's one of my favorite setups when price action just hits underneath the level and moves sideways. It's basically the guys grabbing the battering ram to get a better grip and pull back and try again. And eventually, if they're lucky, that line, that very definable line that we see right there, if it gets broken through, those are the ones that I like for momentum. So I like that one. We just got to get above the recent highs here, above 2480-ish. For the most part.
And then you want it to stay there. You don't want it to drop back below.
No, you do not want to see a wick above intraday and then close down below. If you're looking for a swing trade and it wicks above and closes back below, get out.
Mm-hmm.
Not going to probably do what you want it to do. You need it to close. I say that all the time. You want to see a close below the breakout. You want to see a close above the moving average. You want to hold a close for a couple days above these levels.
And then you got an easy stop. Yeah, your stop's
Kroger might
easy.
be doing something in after hours here. Let's just take a look just to make sure. Phantom tick, just one little tiny tick, so nothing going on after hours.
Mm-hmm.
I see that little tag move,
Yeah.
that green tag. You don't have to go to the after hours to switch to see that right there. That was the last print of the day. Let's go to Tesla and see what the last print of the day was. Last print of the day after hours is down here at 282.80. Let's go in and just verify that. Properties, post-market. Yep. So you guys don't have to go in and go to properties and put the post-market and just look for that green tag after market, and it'll kind of show you where the current price is trading. All right, Scott, that's all we got. Let me bring up the slide deck and get on the new screen here and go to presentation mode.
Yeah,
all right.
Good. So most of you should be aware. If you don't, we have a podcast. Just search for Trade Ideas Podcast wherever you listen to your podcasts and add the subscription to your podcast subscription list. And you can get the newest one that'll come out on Friday, and stay tuned for that. Listen to the newest previous episodes too. There's a great ebook that's out featuring entries from Steve and Andy, 5 ways to win in a post-BTFD market. So just go to trade-ideas.com/ebook to get that. It's got a lot of great, it's got 5 great strategies to have in your trader's toolbox when the market's no longer in a bear run. So get that. We have a discount code that's good this month. So you're going to want to use the code Mayflowers before the end of May to save. Just enter it. It's all caps like you see it on your screen. Use that before the end of May. Save 15% off your first month or year of Trade Ideas. And subscribers, you can also use that to upgrade from standard to premium. So do that and save off that first month or year of premium. Any questions at all, email us, info@trade-ideas.com. You can follow Steve Gomez at TodayTrader on Twitter, Dan Merkins at TradeIdeas1, Jamie Hodge is at QuantBot. We've also got at Trade Ideas. Facebook.com/TradeIdeasPro is the place to go on Facebook to like our page so you can follow us and share everything we post with all your friends. Thanks all. Thank you, Steve. Thank you, Andy. We'll have a recording up tonight or tomorrow morning.
Thanks, guys. Good questions.
Everybody. I'll see you Thursday.
All right. Later.